can you check on Mr. Robert and Mrs. Genevieve for me? You can lead them to my office now.
Okay, forward. Here they are. You may now take your seats and make yourself comfortable. Do you want coffee or water?
Coffee will do.
Thank you for the help, Beth.
So, how are you? It's been a while since our last discussion.
Yeah, it has been a while and we are doing great. We are excited to meet you and hopefully this meeting will be as productive with you.
Yeah, it's good to be back in your office. Your previous presentations have helped us a lot. So we think that it is just right that you handle this part of our financials.
So, thank you so much for the trust and confidence you have in me. So, it's great that our combined effort is doing something good. So, let's start.
Thank you. So it's like
Yeah. If you have any questions during the discussion, please feel free to butt in. So,
okay.
the purpose of this meeting is to discuss to you my recommendation in relation to your insurance needs. So, based on your needs analysis that we have conducted, I have recommended the following. So, Robert, I recommend that you apply for life and TPD insurances for 1,573,000 life and 1,563,000 TPD any occupation. So this will be within the superannuation environment. So I also recommend you to apply for 1,563,000 TPD owned occupation, which will be owned personally but will be linked with your other TPD insurance cover. So the amount of cover will be reviewed on an annual basis. So in most cases, this can be reduced. This can be reduced as your asset increase and your debts start to reduce. I also recommend you to apply for income protection. That would be 7,500 per month. This is computed by 75% of your annual income divided by 12. With the product provider, it's TAL, with a 90-day waiting period to age 65, with an agreed value contract. This is also to be owned personally. So I also recommend you to apply for 100,000 cover, which is to be owned personally. So for Genevieve, considering our recent discussions, we recommend you to apply for 523,000 life insurance and 513 TPD any occupation within also the superannuation environment. I also recommend you to apply for 513,000 TPD owned occupation, which is via a TPD Superlink arrangement to be owned personally. As mentioned, this will also be reviewed on an annual basis. So my other recommendation for you is to apply also for income protection, which is 2,279 per month, which is equivalent to 75% of your annual income, with a 90-day wait payable to age 65, also on a agreed contract to be owned personally. So I also recommend you to apply for 100,000 trauma cover. All this cover will be purchased with TAL Life, which is the product recommendation, which is also one of the well-known insurance provider in the country. The amount is calculated using the data provided by you and are all presented in the needs analysis portion of this statement of advice. The amount can be changed even if the policy has already been accepted by the insurance provider. The insurance provider has the power to accept and decline any insurance application. They can also cancel any insurance contract already in place. So, as mentioned, the product recommendation was based on the research I have conducted, which are all laid out in the statement of advice. So let's discuss the insurance cover one by one. To begin with, it's I recommended life insurance to the both of you. So life insurance provides you a lump sum payment to a beneficiary, third party, or to your estate in the event of your death. So this is also common that all or part of your life insurance benefit is paid to you if you are diagnosed as terminally ill. So the recommended life cover will be owned by the trustee of the superannuation. So for the following reasons. So premiums will be funded from your superannuation balance, and so that it will not affect your personal cash flow. This will also achieve your objective to minimize the impact of insurance premium on your net income position. So life insurance may be tax deductible to the fund, and you may benefit from some of all this tax deduction. Premiums for personally held policies are not tax deductible. So life insurance benefits paid on a superannuation fund are tax-free if paid to a dependent, including someone in an interdependency relationship such as same-sex relationship. The exception is when an income stream is paid and the deceased and the dependent are both younger than 60 years of age. So basically, for if you guys decided to receive the death benefit superannuation through lump sum payments, if it will be given to a dependent, so it will be taxed at 0%. Then for non-dependent, the taxable component will be taxed at 17%, while the untaxed element would be 32%. So next would be the TPD, or the total and permanent disability. So TPD insurance provides you a lump sum payment to help cover medical expenses, ongoing care costs, and to meet ongoing living expenses if you become totally and permanently disabled. The meaning of total and permanent disability can vary, and it's depend in each policy document. So we recommended the following definition and ownership structure for your TPD cover. So superlink, so it allows just a portion of your TPD cover to be held through superannuation. So any occupation will be owned through your superannuation, while the own occupation will be owned personally. This structure apportions the cost of the TPD between your superannuation fund and your personal cash flow, reducing the overall effect on your personal cash flow position. So any occupation, if you are unable to perform in any occupation to which you are suited through education, training, or experience, so this is a more flexible definition when compared to the own occupation definition. Any occupation is the only definition available in superannuation for those engaged in gainful employment. So premiums will be funded from your superannuation balance and will not affect your personal cash flow. This, so for own occupation, you will be able to get the benefit if you are unable to perform duties of your current occupation. This definition is suited to your occupation given it is a more comprehensive policy definition available for TPD. You may also receive the benefit if you are able to work in a different occupation that is not impaired by your disability. So own occupation TPD are not available through superannuation and it must be held in your personal name. Claim proceeds should not be subject to tax, providing surety as to the benefit amount received. In the amount of a claim, you will be assessed under the any occupation definition first. If you qualify for the TPD payment, the sum insured will be paid to you, and the level of cover under the own occupation definition will reduce to nil. If you do not qualify under the any occupation definition, you will be assessed under the own occupation definition. So if you qualify for a TPT payment, the sum insured will be paid to you, and vice versa, the NA occupation definition will be reduced to nil. So the recommended TPT cover will be owned by an insurance-only superannuation fund structure. This means that the insurance will be held within the superannuation environment. However, you will only have a superannuation account for holding the insurance and receiving payment of the premium. So the TPD insurance premium can be funded in one of two ways. So first one is via a yearly rollover from an existing superannuation fund of the exact premium amount, or also by contributing a concessional or non-concessional of the exact amount. So for the calculation of the taxation of the benefits that you will receive, it is quite complex. So you will need to compute first for the tax-free component of the benefit. So the tax-free component of a disability super benefit is increased by the client's future service period, which broadly represents the period they would have expected to be gainfully employed. So the formula would be amount of total super account benefit multiplied by the years to retirement over the service years plus year to retirement. So that's the calculation for the tax-free component. Then that tax-free component will be deducted to the amount of total super account benefit to compute for the tax component, which is then pre-tax at 15%. So next would be the trauma cover, which is also known as the critical illness cover. This provides a lump sum payment to help cover medical recovery and living expenses if you are diagnosed with one of a specified range of critical illness or injuries. So some trauma benefits are subject to a qualifying period with a benefit payable as a lump sum following diagnosis. The type of events covered by trauma policies include heart attack, stroke, cancer, chronic fever, lung, and kidney disease. So at the time this advice has been provided, we believe that this meets your objective and is in your best interest for the following reasons. So trauma cover is not available through superannuation, so we recommended this to be held in your personal name. Claims proceeds should not be subject to tax, providing surety as to the benefit amount received. So the only drawdown with this one is that the tax, you will not be able to claim tax deduction on the insurance premiums. So the last cover I recommended was a income protection cover. So income protection cover, also known as salary continuance, so provides you with a regular source of income should you be unable to work for a period due to sickness or injury. You can generally insure for up to 75% of your earned income after a prescribed waiting period that lasts for a prescribed benefit period. So at this time, this advice has been provided. We believe that it meets your objective and is in your best interest for the following reasons. The recommended monthly benefit is the maximum level of cover you are eligible to receive given your current level of income. This includes your employer superannuation guarantee contributions. So we also recommended this cover to be held in your personal name because the premiums are generally tax deductible to you. The definition of disability is generally more favorable outside of superannuation Further, in the event of claim, there's no need to meet complex rules surrounding the ability to release claims proceeds from the superannuation environment. So you can obtain your income protection cover under agreed or indemnity value option. We recommended agreed value contract for you as your income can fluctuate over time, and this type of contract provides you with more certainty of the actual amount benefit you will receive in the event of a claim. You are able to substantiate your income now, and this will provide you with peace of mind at the time of claim. With an agreed value contract, you will be required to provide proof of income at the time of application. If your income was to decrease prior to making a claim, the agreed sum insured will still be paid to you. So we recommended also a 90 days waiting period for your policy as your financial resources are sufficient to cover your living costs over this period. So the premiums are lower when compared for premium policies that have shorter waiting period, so 14 and 30 and 60 days. We recommended that your income protection policy provides you with a benefit to age 65, as this will allow you to receive a portion of your normal income if you are unable to work under normal retirement age. So for the um, deduction on your tax, you will also be able to claim tax deduction on the insurance premium that you are going to pay. And the benefit received from this insurance cover will be part of your gross amount accessible the individual income tax marginal rates. Stop. Alright guys. So the insurance cover will also be in will all be in level premiums. So you intend to hold the insurance cover in the long run. So which makes the recommendation suitable to you. Level premiums are constant throughout the life of the policy, and making this type of policy more expensive in the early years, however, over the long term, are significantly less expensive. So just like any recommendation, I've also listed the risks and disadvantages. So for life, so when premiums are not funded by additional superannuation contributions, the cost of insurance will result in a lower superannuation balance at retirement. In case of terminal illness, there can be delays in getting a payout, as the superannuation fund trustee will need to take necessary steps to ensure the payment aligns with the superannuation legislation. So a superannuation death benefit is tax-free only when paid to a dependent. So a superannuation death benefit paid to a non-dependent may be taxed up to 30% plus Medicare and levy. A superannuation death benefit will be paid in accordance with a valid binding death benefit nomination. If you do not have a binding death benefit nomination in place, the trustee of the superannuation fund will use their discretion to determine how the superannuation death benefit will be paid and to whom. So generally, death benefits are not payable if your death was caused by suicide within 13 months of commencement of a new policy. So for TPD, where premiums for the superannuation owned portion of your policy, so same with the life additional superannuation contribution, the cost of insurance will result in a lower superannuation balance at retirement. While premiums relating to the personally owned portion of your policy will need to be funded personally and therefore reduce the level of surplus cash flow you have. If there are changes to your personal cash flow and you are no longer to meet the cost of the premiums for the recommended policies, your cover may lapse. Partial rollover fees may also apply upon the rollover of your superannuation benefits from your superannuation to fund the insurance premiums. So the cost of this premium will therefore reduce your level of surplus cash. So while the insurer may accept any occupation DPD claim, the superannuation fund trustee can only release the insurance proceeds if allowable under superannuation laws. And where a condition of release has been met, a condition of release can include where a member has ceased working due to ill health and the superannuation fund trustee is reasonably satisfied by that the member is unlikely to engage in any occupation for which the member is reasonably qualified by education, training, or experiences. If the superannuation fund trustee is unable to release your insurance proceeds, then they will be held in a fund on your behalf until you meet a condition of release. So for a TPD benefit to be payable, the diagnosis of the illness or injury must meet the policy definition of total disability. So for a TPD benefit, is not payable if the condition is caused by an intentional self-inflicted injury or attempt at suicide. So next, for trauma, since it will be funded from your personal after-tax income, it will also reduce the level of your surplus cash flow. Then premiums for this cover are not tax deductible. Then trauma benefit is not payable if the condition is caused also by intentional self-inflicted injury or attempt at suicide. There is also a waiting period on new trauma insurance application for some conditions, typically 3 months. The conditions that are not covered during this period can generally include cancer, coronary artery surgery, heart attack, open heart surgery, repair or replacement of aorta or valve and stroke. Then, last one for income protection. So since it is also paid through your personal cash flow, it will affect and reduce this your budget. So while the insurance may accept an income protection claim, so the superannuation fund trustee can only release the insurance proceeds if allowable under superannuation laws. So for income protection to be payable, the diagnosis of the illness or injury must meet the policy definition. So also insurance protection proceeds are classed as assessable income and subject to your marginal tax rate. Your income protection is not also payable immediately at the time of successful claim, as you will need to satisfy the waiting period. Your benefit is only payable for the selected benefit period to the policy. So, any questions so far?
So no questions so far. As expected, the discussion you have made all makes sense and it's very helpful.
Yes, I do agree.
So if you don't have any questions, we can now proceed with our discussion. So with regards to the fees, as a general practice, we will not charge you with any advice and implementation fee. What you will need to pay will be the product fee, which is the insurance premium. So advice fee covers the preparation of the statement of advice, which includes the pre-statement of advice procedure up to the actual production of the advice documents. We normally charge different fees for the implementation fee, but with this kind of advice, this will be waived. For those cover held through your superannuation, you will need to make a rollover from your superannuation fund to pay for the insurance premium. While for those cover held in your personal name, you can pay the premiums in various ways. So first, you can set up a direct debit or credit arrangement to automatically charge your bank or your credit card account with the premium. You can also pay via BPay. As disclosed in the statement of advice, I will be receiving certain amounts from the provider. I will be receiving a commission called upfront commission, which is 110% of the annual insurance premium. This is for the first year commission. I will also receive commission for the succeeding year, in which the percentage is 11% of the annual insurance premiums. Please note that the commission I will receive will not does not affect the advice I have provided you. I have considered your needs, goals, and objective and have prioritized your personal interests rather than mine. So, are you guys happy with my recommendation? And do you have any issues with fees involved with this advice?
It's good. I don't have any background and knowledge with this kind of stuff. But with your discussion, I'm happy with the recommendation and I'm looking forward to get this started with.
Yes, I agree. So how are we going to start all this?
So, as usual, I will be the middle person all throughout the application process. First thing that we need to do is for you to fill up application form from the insurance provider. It is highly encouraged for you to fill in all the necessary details and disclose any relevant information that might affect the decision making of the insurance provider, whether to deny or accept your insurance application. So please note that the failure of disclosure of important information on your insurance application may mean non-acceptance or cancellation of insurance cover and claims. So once your application form has been completed and signed by the both of you, I will send this out to the insurance provider for review. They will also require you to undergo medical examination to determine whether to accept or decline your application based on your current state of health. The examination may also affect the insurance premiums that will be charged to you due to loadings and exceptions that may be imposed to your insurance cover. I will assist you to book an appointment to a doctor for the medical examination. So the medical result will be sent to the underwriting to determine if they will accept your insurance application or not. So if the application will be accepted, I will send a confirmation letter to you. Then you will need to set up a payment method to pay for the insurance cover. For insurance owned by your superannuation, you will need to set up an annual rollover, as mentioned before. While for personally owned insurance, you will need to pay direct debit or credit to your bank or credit card account to automatically pay for your insurance cover every payment period. So you just need to make sure that you have enough fund to avoid cancellation of your cover. You need also to note that the insurance premium in the advice document may not be the same with the accepted insurance cover. Stop muna. So, if the application will not be accepted, we will help you reapply and renegotiate with the recommended insurance provider. Otherwise, we might need to investigate other options available in the market. Of course, to start all of this, you will need to sign first the authority to proceed portion of the SOA. Signing the authority to proceed signifies that you have read the whole statement of advice and supporting documents provided, and you agree to implement the listed recommendation. This also means that you are okay with the level of risk that you will be exposed, as well as the fees and the remuneration I will receive from you. If you agree with this, you can now sign the client declaration.
So, thank you for explaining all of this. Considering that you have been part of our financial planning journey this couple of months, it is safe for us to sign and we are happy to proceed with your recommendations.
Yes, you have helped us a lot with our financial decisions, and we would still like to continue this journey with you.
So here's a copy of these SOA. You just need to sign on the last page, which contains the authority to proceed section. So also, I would like to discuss to you, just like before, the ongoing service agreement. If you would like to have your insurance cover be monitored regularly and you have constant updates in relation to this advice, you will need to sign an agreement with me. We do have three packages available for the ongoing service agreement. So first one would be private client package, which offer the following services. So strategy review, portfolio review, face-to-face meetings, portfolio administration, quarterly portfolio reports, economic and market update emails, client briefings, newsletter, unlimited advisor access, and online portfolio access. So next one would be the premium service package, which offers the following: so portfolio review, face-to-face meeting, portfolio administration, quarterly portfolio reports, economic and market update emails, client briefings, newsletters, limited advisor access, and online portfolio access. Last one is the core service package, which offers the following services. So portfolio review, portfolio admin, economic and market update emails, client briefings, newsletters, and limited advisor access. The price for the ongoing services are as follows. So for private, it's 1% of your investment portfolio balances per annum. Premium, it's 0.75%. And core, it's 0.50%. So if you choose to have a no ongoing service option, I will no longer be obligated to provide you an ongoing review in relation to this matter. You can also choose one of these packages at the latter date. You just need to inform me so that we could both sign the agreement formally.
We will keep this in mind. Is there anything else we needed to know?
So that's basically it for our discussion. As always, I will be in touch with the both of you all throughout this process. I will control the implementation process, so if you have any question, please feel free to contact me. So thank you so much for your time, and I'll talk to you soon.
Thank you.
Thanks also.
Thank you.
Thank you.
Yes.